Hello and welcome to another article video. If you're new to the channel, my name is Meydan. I'm a finance professional and a fintech entrepreneur, calculating the future swing days, the trading hours of the day, plus we've got a pricing model as well. So if you're interested in time and price trading, this YouTube channel can give you a few good ideas. Let's carry on and look at an article and see how time and price can really help us out. Remember, all my videos are just focused on looking at every possible situation that traders can have with time and price together. If you're new to the channel, there are a lot of videos in this playlist and other playlists as well you'll find interesting. In the interim, let's get a move on with the article. Now, this article is called "You Should Stop Chasing Trades." So let's get a move on. All right, so first of all, let's get me out of the way as well here. Now, a lot of times we don't know, well, not a lot of times, we never know what's going to happen and when it's going to happen, right? Until now anyway. So what we do at the globaltrader.club and as a fintech company at adea.llc is we pre-calculate swing days and swing hours. So if we can calculate the swing days and the swing hours in advance, and we can have a pricing model to go with it, then obviously we don't have to chase the market. We can just sit down, relax, wait for the swing days, wait for the swing hours, and then see if it matches our price, and then go with the flow, right? So we can go in that direction, and that's all we need to do. So we don't need to chase trades. We need to pre-calculate and anticipate them. All right, and this is why we time the market in advance. Now, most traders fail. It's not because they're failures. It's not because they don't know how to do technical analysis. It's not because they don't know how to do money management. A lot of people are quite well skilled. However, though, because we're in this waiting game, we're always, on the edge of our chair looking for setups and so on. It kind of gets distracting. And you can't sit in front of the screen for hours and hours and hours. And what happens is you lose your psychological edge. You lose your mind, in other words, all right? So you start entering trades when you shouldn't be entering trades. You start feeling that FOMO, the fear of missing out, and then you jump in after the move has happened because you opened the screen and the market moved in London, and all of a sudden you were a bit late, so you dived in afterwards. And all these kind of psychological mistakes that we do are actually problems because we don't know the good day and the good hours of the day to trade. Now, the good hours of the day isn't necessarily London opening or New York opening or the time frame when they intercept. It's not necessarily that at all. In fact, if you watch my videos, the daily videos as well, you'll see that more often than not I'm taking trades like in the middle of nowhere. Sometimes it's New York, sometimes it's London, sometimes it's before London in Asia session, because you can't really tell and you can't really say, okay, this is the session where the action happens. It can happen at a session where there's more volatility like London and New York, but doesn't necessarily have to give you the best entry at those sessions, right? So instead of chasing the trade, what we want to do is time the trade. So if I time the market first and determine for myself the decent swing days and hours, then I can say to myself, you know what, these are the days I'm going to trade. And if you have a pricing model as well, for example, I've got a pricing model which I've done myself. It's called PST. For example, this is the weekly chart, right? This is gold. This is on the weekly chart. And let me just move myself out of here, right? So if in a certain week, like last week or this week even, if I know the weekly price, and if I have a time for that weekly price, if I get there at that day hour, can I make a good trade? Yes, I can. All right, and if you take a look, watch the previous videos, right? Last week, for example, we were at 3,124 to 20. This is this week's. Okay, last week we had a different price, and that also constituted to this level here. So the market was down here. In fact, it was on this hour. It was right down here. We were here at the trading hour at a price which was calculated exactly being 3,120 to 3,124, and the market went up. Now look at that weekly PST pricing model. I've got a time, I've got a price, okay, and I've got the swing days on my side, or the weekly price levels, which are good levels. It's going all the way up. You can see this on my social media posts as well. What I'm trying to say here is very simple. A lot of traders know how to do technical analysis. They know how to do money management. Every trader, actually most of them, right, with their heads screwed on, if they've got something in between their ears, they know what to do when they're trading. The problem is they don't do it. So I'm just going to move myself back here. Why? Because more often than not, we get stressed out. Okay, why? Because many traders are like in the business of trying to make money from trading. Okay, that's fine. We all want to make money from trading. But if you're stressing out because you have to pay the bills, pay the rent, and so on, then you're going to force a trade instead of being smart and timing the trade. Okay. Also, money management is not an edge. Money management is complementary to your edge. Your edge should be technical analysis, decent pricing with decent timing and money management. Because if you have good money management but your trading sucks, or you don't have a decent edge, or you can't keep your head together while you're trading, then you're just slowing your losses. Okay, so good money management is obviously essential and it is important. However, though, it is not going to be the only thing. So you need time and price on your side. When you chase trades, you're just going to increase your risk to the return that you're anticipating from the market. Okay. Now the solution is let the trade land on your lap, and that is called waiting. But we have a problem with waiting as traders, don't we? We don't know what to wait for and how long to wait for, what to wait for, even if we know what to wait for. So that is a problem. And when things aren't happening, when we're waiting and waiting and waiting, we tend to enter trades. That's not a good idea. So what we want to do is have a solution, which is let the trade land on your lap. Okay. This allows you to be calm, pre-planned, and timed. You don't have to rush anything because you know the trade hours. Like today as well. Today I've done a euro dollar. Yesterday I did a euro dollar. You see, I entered the trade at this trading hour here with a tight stop loss. The trade is already managed. I hit take profit 1, and this is a really example I did just actually with the case studies for euro dollar as well, and I did a video just a while ago on why you should focus on the process in the same playlist. So if you watch all the videos I'm doing, you'll see that I'm addressing every problem that traders have. When you're waiting for the time, you know the time and you know the day. So if you have a swing day pre-calculated, if you know Monday, Tuesday is a swing day for the euro dollar, you know that's the time when you're going to start to trade. That's the day. Those are the days you're going to be looking out for. Okay. If you know the swing day, I don't know, for whatever, for gold, that it's going to be Monday. Right. This week, I think it was Monday. And you see we're in the middle of nowhere. This could go up, all right, or down. And today, as you can see, we've got an inside bar. We don't know where this is going. Okay, we don't know. But if I know Monday was the swing day, I could say to myself, well, wait a minute, this could be going up or down. So it could be a swing high pushing down. It could be a swing low going up. But I know this was the day. So if this day is correct, until the next swing day, the only thing that should happen is that either this is going to stay a high or this is going to stay a low. Because once it breaks out, I know until the next swing day, that's the direction. So I don't have to muck around in front of the screen all day looking. Same with anything you want to trade. For example, SP 500, Monday was a swing day. So we know that these are highs, and this is not a place where we want to be buying because we don't like to buy the tops. Well, I don't anyway. So the only thing I could do, if this is going to be a high, and Tuesday is also a swing day for the Dow and Nasdaq, two things can happen here. We're either going to sell off, okay, or we're going to break out, okay. But I'm not going to be betting on a breakout when the market sold here before. This is a place where they sold heavy. Okay, this is called a reason, the cause. So then I'd like to sell here again because this is where they sold heavy. So I'm expecting sells. So I know my bias is to the downside. All I have to do now is wait for the trading hours to happen. And look at yesterday, for example. These are the trading hours for yesterday. See how the market came into 5,879. What is 5879 anyway? It's the weekly support line on my PST indicator. All right. As you can see here, let me just move myself. This is the PST line. And this line has a number here. It's 55.54. Now this is a weekly chart. So weekly PST is a strong level. It's either going to bounce. If it breaks, it's going to break. Okay. This 55 is a price of 5,879, which you can see at the top here. So when the market yesterday came down Monday into 5879 here at a trading hour in London, okay, then the only thing New York had to do was just follow it all the way up. And that's it. You see, time and price is the way to trade. And that way you're not mucking around. You've got a time and price correlation, which means your stop loss is really tight, because if you are wrong, you don't want to be in that trade. So understanding that we're coming to a price, which is a weekly PST level, at a trading hour, and you've been falling into it, the only thing you can do is buy it. That's it. And that's your Monday SP 500. And then the market makes a high, and today is a swing day for Tuesday. For Dow Jones and Nasdaq, Monday was a swing day. You can see it's a big day up. The swing days should give us the lows, highs, or good move days. And those good move days are, or the reversal days, are the days we want to be trading. So understanding that you don't have to chase anything, you just have to time it. But I sometimes see people making the big mistake of not using money management when timing the market. They'll just enter the trade and say, you know, it's a swing day, my bias is to the upside, and they'll go up or down depending on their bias. Well, it's not a very good thing to do either. Despite the fact that you can be 80% right, and I've had those moments, 72% right on euro dollar, 80% right on gold, those things do happen, but it's not all the time. And that 20% you being wrong is enough to blow your account 20 times over. So the technical analysis, the pricing, matched to your timing with your money management is the minimum risk but the maximum return way to trade. And that's what we can really ask for, minimum risk to maximum return. Because if we're good traders, the first thing I'm always thinking about is, well, I don't want to lose money, so what's the minimum risk here? All right, and what's the maximum return? If you time it right, and if your timing is correct, your stop loss should be small, it shouldn't be big. Now if you have timing on your side, you're going to build discipline, because you're not going to be trading any day or any time, or you're not going to be wearing yourself out in front of the screen waiting for setups. Understanding the good hours is the way to go. Understanding the swing days is the way to go, because you can say, you know what, I'm trading Monday, Tuesday, euro dollar, and do I have any other swing day on that week for euro dollar? Maybe I've got Friday or Thursday, I don't know, because these are intra-week swing days. They're not major swing days. They're for day trading swing days. So once we got those, that's it. You just trade on those days and you relax. By the way, I got some good news. I got a beta version of the swing day calculator coming out soon. All right, so that's coming out soon. So this will build discipline. You know the day, you know the hour, you know the price to trade at, and that's it. You don't overtrade. You don't revenge trade. You execute with clarity. Everything is just nice and honky-dory. Just relaxed trading. Okay. If you stop chasing and start anticipating, you're going to be a much better trader. And the whole idea is really to minimize your risk, because you won't get it right all the time. But if you understand your setups, your technical analysis matched to the swing day and the swing hours of the day, you're just going to be relaxed, and you're going to have a much more profitability rate, and your losses are not going to damage your account. You're not going to get a big dent in your account. Okay, what you will have is consistently profit loss statement, like real P&L constantly going up and up and up with minimum risk. So don't chase anything. You don't have to. You just need to anticipate it and have a good pricing model. If you've got a good pricing model like PST, look, this is this week, right, on SB 500. Last week it was on gold, on Thursday. Imagine just taking one trade. I mean, you took one trade, you went all the way up. And I did say last week this could go all the way into closing. And it just went up and up and up all the way into the closing, or like 10 o'clock or something like that, which you can actually see in my posts as well. That's it. You take one trade like that a week, okay, bouncing off a weekly PST, you are a done deal. Same with this SB 500. See how minimum risk that is. You're entering the trade literally around here at the weekly PST. You've done a low. All you got to do is put your stop loss slightly under, because if your timing is wrong, you don't want to be in that trade. You could, in fact, even wait for the market to make a breakout, because you got the timing. You can say, well, this is the trade hour. The market breaks out, comes back into a good buy kiss. When you enter here, your stop loss should be just below the low that it did at the trading hour. Because if your trading hour is wrong, if you've made a miscalculation, or if I made a miscalculation and you're in the club area, you don't want to be in that trade. And this is why the risk return is so good when you're trading with time and price. All right, I hope this helps. If you've enjoyed time and price videos, give me a thumbs up. I don't have a lot of subscribers, but I think time and price correlation is the best kept secret in trading. And every day I post for the month, for the weeks and the months ahead. In fact, let me show you what I do post so you guys can get an idea. Right, there we go. So for example, this is for this week, right, from the 19th to the 23rd of May. And I've got the swing days and the swing hours. They're all posted. They were all posted for the full month of May, mind you. You see, the whole month of May is, you can't see it there, but you will in a minute. This is the full month of May. And tomorrow I've got it scheduled, the full month of June, with all the swing days for every week is going to be coming out, and the hours as well for every day. So you see, I've got swing day for gold, Monday, Thursday or Friday, Euro dollar Monday or Tuesday and Friday, Bitcoin Monday and Thursday and Saturday. And now I've got Monday and Wednesday for SB 500. For Dow Jones, I've got Tuesday, NASDAQ Tuesday, and Dow Jones got an extra day on Thursday. So knowing these days, I can say, well, you know what, I'm going to do whatever I need to do for the Dow on a Tuesday. So today is a Tuesday, all right, and today is a Tuesday. So we're going to have to see how Tuesday pans out. Now, this is a place where they sold before, okay? So maybe Tuesday, maybe we'll sell off again, okay? So if you're trading Dow Jones, you're at the tops. What you'll be looking out for is the trading hour, which matches your pricing model and sell it at that time. Now on Dow Jones, for example, on this one, I've got an LCL1 line here, which gives me a price of 43,128. So if the market does go up there, because Tuesday, swing day, but it's all day Tuesday, so we might hit a top. And then Wednesday could be the sell off day after the top is done. All right. So same for a bottom as well. So knowing these days in advance, understanding you're going to have a big day or a reversal day is going to help you out. Same with the Nasdaq. Okay. So if I know the swing days, that's it. If I want to sell, for example, today, daily 79 was a price of 21,533, and this is the daily chart. You can see the high was 21,481. Okay, so pretty close to that 21,533. Market sold at 21,481.75. If I had that at a trading hour, that would have been a sell-off. Why? Because I've got price pretty close at the right time. So getting in to sell is okay. And then I've got the target levels here as well at the bottom. Okay. That's the price for the PST 79, giving me a price there 21,533. Okay. So if that happened at a trading hour, we would have been selling it off because it's pretty close, right? And those are your targets. If the market goes down from there, where am I going to come down to? I need to measure that out. So then I can see, well, I've got 70 as a target. That's 21,221, 21,226. So I better make sure when we get there, I take some profit, 21,226 there. So if we come there, I'm going to be taking profit, managing the trade, doing something, especially if it's at a trading hour. If it's at a trading hour, I might even say, well, wait a minute, the trend is still up. Why don't I buy as well? Because the time is right, the price is right. Okay. So the same thing with the Dow, same thing with Bitcoin, as you can see. Now today is Tuesday, and Bitcoin at a swing day, Monday. Right, so that's Monday. So the market made a high, and you can see they sold off from there, which is actually a price level that we had there, 106,877. This is on the daily. You can see that's the LCL line there, that blue line there. Okay, and every line has a price tag. If price matches time, that's when you trade, and that's it. So you don't have to guess anything, you just have to match it up. And our pricing models are really, really good. The PST indicator really is like gold on its own. Just on its own, trading off the PST is also good. So having a time and price model is just going to save your trading, save your trading career as well, because you're going to be much more disciplined, and you're not going to have all these when to trade, what to trade, how to trade kind of questions. You know when to trade, you know what asset to trade, and you can calculate these for any asset. And like I said, that beta version of the software is going to come out. Then we're going to have swing days for anything anybody wants to trade, and then you won't even have me doing the swing days either. All right, I hope that helps. This is another video to help you understand and trade with time and price. And good luck with your trading.